Camera for Cam's Mortgage Minute on Friday, May the 24th. Hey, with the weekend here, I thought I'd leave you with just the facts, man. I don't know if you ever used to watch that show, Dragnet. And then Dragnet, they always used to say, hey, just the facts, ma'am, just the facts. So here they are. It's some interesting housing and debt numbers and different things. Overall, housing starts are projected to decline from 205,000 in 2011 to about 150,000 by 2014. In total, the housing starts downturn will reduce related employment by 80,000 jobs. This is what they're predicting. For mortgages repaid during the past 2 decades, actual repayment has been about 2/3 of the contracted period. So what that means is that they've been paid down pretty quick in that time frame. 8% of homeowners took equity out on their home last year. The average equity takeout was about $48,000, with the primary purpose, according to the folks borrowing, was for renovations and home repairs. Would go contrary to what we hear all the time. It's for frivolous things. 83% of homeowners in Canada have at least 25% equity in their home based on today's market. So if all of a sudden we had a 15, 20, 25% correction, everybody, according to the average numbers, would be about breaking even. Overall, 65% of mortgage holders have fixed rate mortgages, and for those taken out in the last 12 months since the government mandated some changes, that figure rises to about 85%. So the majority of people are either taking fixed credit. If they're not, it's either going to be a variable or lines of credit, and they account for a small portion. The average mortgage rate is 3.52%, and for those renewing in the last year, that average has been about 3.15%. And for the 12 months past, the actual average for a 5-year fixed rate mortgage has been about 2.2% below the posted rate at most institutions. 60% of Canadians have 2 or more credit cards, including 30% who have 3 or more. And the average outstanding balance on the credit cards is about $3,500. Mortgage credit growth is slowing dramatically. For 2014, it's forecasted to be about 2.5% to 3%, or roughly half the current rate. So we're definitely going to see a slowdown according to these numbers. Mortgage brokers, folks like myself, still account for about 25% of all mortgages. And for new mortgages in the last 12 months or so, we've accounted for about 31%. 18% of mortgage holders, or about 1.1 million people, voluntarily increased their payments, so 1 in 5, while a further 16%, or about 975,000, made a lump sum payment during the last year. Again, good numbers. So just some facts, some interesting stuff to churn over through the weekend. Basically from that, you would gather that folks do have some equity. They seem to be disciplined in wanting to pay it down. They're committed to actually increasing their payments. It would appear that the equity takeouts have not been for frivolous things. It's not for vacations and trips to Vegas. You know what? Based on this, it would give you some comfort. Again, we'll see what goes forward, because I read another report today where they were forecasting a 25-30% decline in the market. But again, based on that number, that 83% of homeowners have at least 25% equity in their property, looks like we could weather that too. Anyway, lots of wonderful things up ahead. I'm sure we'll be discussing it more than once or twice. The weekend is here. The weather where we are is certainly fantastic. Hopefully it is where you are. I look forward to assisting you, as does our Auxilium team. And again, if we can be of any assistance, don't hesitate, give us a shout. Enjoy your weekend, and I will see you on Monday.